Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but she has a really popular Twitter now. She is a chartered financial analyst and a CPA. She worked in the past at Allianz in the hedge fund industry, and also worked at Real Vision, writing for their think tank, which is paid investment newsletters for hedge funds and high net worth individuals. Currently, she's an equity analyst and global macro strategist at Ascend Investment Management. Emma Muhleman, thank you for joining me.
Thanks for having me, Jason.
Now, Emma, since you're a global macro strategist and you do tweet out a lot about the global macroeconomic picture, you're also recently suspended by Twitter for, just talking about Chinese companies and the Chinese markets, and we'll talk about that later in the interview. I want to get your thoughts, though, on what the global economy, what's happening right now in the global economy, and what these central banks have done, in your opinion, in the last 10 years or so to get us to this point.
Thanks, Jason. Yeah, so there's a bit to untangle there. So I think I'm going to start with, kind of go chronologically how we got here and then where we are. So if we look back to the financial crisis and what happened thereafter, basically you had, the U.S. Fed go take rates to zero, use quote-unquote unconventional monetary policy to try and stimulate economic activity and get in, turn things around. But you never really saw that typical escape velocity that you would see coming out of a recession and into a recovery, which was something that I always saw as emblematic of the artificial propping of markets by central banks and not a true and sustainable recovery, i.e., I suspected it was going to require more intervention or would result in a deeper crash. Here we are, a decade later, and we haven't seen that deeper crash just yet. But I think you and I both probably know we're not going to be able to avoid it forever. And so I think how we got here, aside from what the Fed did, and everybody kind of followed the Fed, and you saw the beggar thy neighbor currency devaluation policies from the Fed to the DOJ to the Bank of England to the ECB. I mean, it was happening all over the place. And in China, they wanted to really gain their presence on the world stage. And as a socialist system, whatever you want to call it, it's a socialist authoritarian system. They don't necessarily allocate capital in the most productive way. It's centrally planned, right? So they went to the gas pedal with crazy amounts of borrowing to fund what I would call manufactured or engineered GDP growth. Yes, they did have a good deal of natural economic attraction and growth from the fact that they were a primary source of labor arbitrage. They were supplying the world with cheap labor. But on top of that, as they tried to move, 400 million people from out of the middle class and out of the poor and into the middle class, they went on infrastructure spending binges that resulted in, for instance, in one province, they built a railway and then they destroyed it, and then they built it again and destroyed it. They did that 4 times over. So this was literally just putting money to work so that you can report, okay, the wages that were paid was X, so that's GDP. And that's why there's still today, if you travel outside Beijing and more to the outskirts or the more rural provinces in China, you see roads that literally go to nowhere. You see wind farms that are connected to no electric grids. You see, and then the grand scale of it is just It's breathtaking, to be honest. So what that did to the world, the way I see it, is it stimulated and inflated the growth of the rest of the world as China purchased iron ore, copper, other commodities from Australia, and oil from Canada, Australia, purchased agricultural goods from Brazil and Latin America, and a lot of that was also driven by, would China have been able to do that without the strength or what appeared to be strength? We could call it manufactured strength, if you will, of the U.S. consumer. Because in the end, when I look at the big picture, the U.S. is 25% of global GDP. So, and our economy is roughly 60% consumer driven. So if we don't have a strong consumer, then we have a cold, you could call it, and the rest of the world is sickly, really sick. So they back then were running, current account surpluses with the U.S. to the tune of $500 billion or so. That helped. That helped China accumulate foreign reserves and keep up this whole facade. And so fast forward to today, you've got a new administration, and you had a change in leadership in China that's made some what I would call material miscalculations in terms of how they wanted to present themselves on the global stage, that kind of allowed the rest of the world to wake up, if you will, and see, what are they really trying to do? And now people are kind of noticing that and how are they doing it, and seeing that, well, hey, if you want to be treated as a special nation that gets to borrow from the World Bank and all this, yet you also want to play with the big kids, in the WTO and be the biggest or second biggest economy in the world, the two don't, and you want to steal technology from us, from Australia, from Israel, from, you don't want to, people are pushing back. And with that, they've got now a changing structure of their accounts. So the current account, capital account. I'm not sure how familiar your audience is with a current account and a capital account, but in essence, a current account surplus means it's essentially a net wealth transfer to whichever country's running the surplus, and a transfer away from the country that's running that deficit. Whether it's in euros, US dollar, Japanese yen, it doesn't matter. It can all be converted. But China needed that $500 billion US dollars in surpluses to allow them to continue to stimulate their economy. And the way that it allowed that to occur is because when they have that net wealth transfer, they can build up these big piles of foreign exchange reserves. And that can help. That just helps facilitate all of it. But now Trump is pushing back on our deficits with China, and China, other factors as well have contributed. But China has what appears to be a structurally negative current account, and they're running a negative 10% of GDP, a negative fiscal balance or capital account. Well, their capital account's closed. The negative fiscal balance of equivalent to 10% of their GDP. So that's huge, and it is draining them of the dollars that they need to be able to continue to function. So what I expect is that you're going to see them slow down, and slow down fast. And right now, you're seeing everybody else around them slow down, yet somehow they're still, pushing out 6.5% GDP. You kind of have to take China's numbers with a grain of salt. And when push comes to shove, we're going to see what really happens. And when that happens, I'm sorry, a bucket.
A bucket of salt, yeah. Not that the U.S. isn't lying either, but like from a lot of people I've interviewed over the years, they think that China is fibbing a lot worse. Let's just put it that way.
Yeah, like, so let's use this example. The recent bank that uncharacteristically the Chinese. There's something to be taken from the fact that the Baosheng Bank failure. China, this happens all the time in China. They just don't tell anybody. Why the officials chose to make it public in this case is telling, I think. I think it's kind of a bit of this is just my opinion, and I could be wrong, but it could be suggestive of the fact that they're aware of much larger problems that they're going to have to like they can't hold the Jenga together anymore. And so they're kind of trying to slowly ease people into this idea rather than have it, all come out at once and really have people running for the exits.
I've been theorizing about that too, because 10 days later, the auditor of an even larger bank with more assets, the auditor wouldn't sign off on the statement, and the bank wouldn't show them the loan document.
Yeah, that was Ernst & Young, right? That's so. What's unusual about that is that most of the auditors are just complicit in China. I mean, Deloitte, China, all of these companies that are listed in the United States that have auditors, they like to use the big four names. All of these companies are reporting fraudulent. They're either inflating their numbers or they have huge amounts of related party transactions. It's usually like family members and uncles, in a web of uncles selling property to each other that didn't really actually move, and no titles got transferred, just like fake transactions basically that they can then report gains on, and often there's actually no business at all underneath it. You would be shocked by the percentage of U.S. listed Chinese companies that are complete and utter frauds. So when I go on my Bloomberg, and I was tasked once with the lovely job of being the stock picker for China, covering China, and I would run. We have a specialized algorithm that we use to find a list of stocks after which we'll go through each one and find the good ones and bad ones and what have you. Well, I'd run it with China, and I get huge lists, right? Because they're so great on all these ratios. So then the first thing I do on Bloomberg is I type in DAS, get a description of the company. Then I go to stock chart, and I would see literally 9 out of 10, the stock chart would be there, and it would just drop off and disappear. Like it would just stop, say 8 months prior, 7 months prior, it would just stop right there. Well, on Bloomberg, you can click right where that, like around the time before it just stopped and disappeared, and you'll see a company found a fraud, the delist disappeared. So every investor that was invested in that company right before that happened, their money just disappeared. It went up in flames. And so it's these big four names that are on these audits. I hate to say that they're worthless, but they oftentimes are just borrowed marketing, borrowed credibility, if you will. So, yeah.
Are these companies larger than the companies that were in the China Hustle documentary? Because there was, a Chinese forestry company or agricultural company, and there were some really big-name hedge fund managers that were fooled, in 2011 or 2012?
Oh, yeah. I mean, so their biggest, I don't want to try to say the names of Chinese banks, but I've been made aware by my contacts in mainland China that we could see this similar occurrence, that similar to what happened with Baosheng, and I hope I'm not, completely mangling it, but I very well might be. The other bank, which I'm not going to name because I will mangle it, we could see a similar occurrence happening, and it's the biggest of that type of bank in China. So it's not China Merchants Bank or China's Import-Export Bank, which facilitates the BRI, Belt and Road, initiative transactions. But it's a huge, commercial bank in China, the biggest one.
So
a lot of these. So look at Alibaba. Look at Alibaba. What happened with Alibaba as well? Look at Alibaba's financial reporting. If your listeners have a chance, or if any of them are invested in Alibaba, I would strongly encourage them to listen to the last earnings call of Alibaba. They didn't talk about earnings at all. Look at the reports. Just spend a little bit of time. If you see any red flags, I would definitely take heed.
I spent 5 minutes looking through their financial statements, and normally when you look at companies, you see their gross margin, their operating margin, their net income, and the gross margin is larger than the operating margin. The operating margin is larger than the net income. And with Alibaba, that was not the case. So I've looked at thousands and thousands of companies' financial statements in all different industries, and I've never seen one like that before. It was just like, what the heck is going on there?
They love the GMV figure. I would encourage anybody who's invested in Alibaba to understand what the GMV is, and relative to what they would normally think of as sales for a company, because there's a lot of accounting intricacies going on there that I'm not sure are allowable according to international financial regulatory reporting practices or U.S. GAAP, but Chinese companies are supposed to be complying with IFRS, so that's the international standards, which are very similar to GAAP. There's far more to it behind Alibaba than just bad financial reporting, but
I saw the Miles Kwok. I saw that Miles Kwok interview that Kyle Bass did for Real Vision Television, and he talked about Jack Ma and Alibaba. So I'm somewhat aware of some of the things going on at Alibaba.
You're probably more familiar with. I haven't seen that. I saw that interview a long time ago, but I have not. I hardly remember any of it. But I read. Well, I won't. I don't want to say the name of this Twitter handle on your podcast. It's just an inappropriate named Twitter handle. But a gent that I chat with on Twitter is extremely knowledgeable. He doesn't like to reveal who he is, but he's extremely knowledgeable on a lot of things: China, Asia, and Japan. And he goes into depth about the shenanigans at Alibaba and the relationship between Jack Ma and Xi Jinping, and what the CCP may have said to or done to Jack Ma. I know Kyle mentioned to me that basically, they took his shares and said, "Hey, you're handing it over to 5 unnamed individuals," and there's still 5 unnamed individuals. And then when he went on vacation, I think at one point he was seen with the Queen of England, and I think that was, according to Kyle, the move that marked his no more time. And now he's forced, when he travels abroad with his family, he's got a security team around him. But as Kyle put it, instead of having the security people looking away, looking out for you, they're looking at you. So I thought that was interesting, at least.
Yeah, I mean, the Miles Kwok and Kyle Bass interview, Miles Kwok tells the story of, basically a James Bond story. If half of what Miles Kwok said is true, it's freaking nuts about all the stuff that's happening in China. So let's talk about...
Yeah. I do think what he said was true. I have sources that I talk to regularly in mainland China, and BGY. I won't talk about what all that means in 3F. This is real, and so if the people are privy to what I'm talking about when I say these acronyms, that's real. And what Miles Kwok was saying, I'm not going to say everything he said about fan bing or whatever. I don't know, but most of what he said there was absolutely true.
So you talked about basically for the Austrian school economists who listen to this podcast, that it was Keynesian ditch digging. So Keynesian ditch digging, Keynes, for those who are not familiar, Keynes said that if the government pays men to dig a ditch and then fill it back up, to dig a ditch and then fill it back up, that was productive for the economy. Austrians, and Henry Hazlitt and Frederick Bastiat before the Austrian school was invented, called this a broken window fallacy. So it sounds like China has misallocated trillions and trillions of dollars in capital. Is a lot of this, Emma, devoted towards like real estate and real estate speculation and maybe derivatives tied to real estate then?
Well, here's how it kind of works. There is a lot that has gone to property developers, but here's the crux of most of the misallocated capital, and which then spread into like in metropolitan cities real estate. But first, it started with like local government financing. To basically, they would give each provincial leader. So China is very fragmented. Targets for what they needed to report back in GDP. And so these leaders know that if they want to stay in favor of the Communist Party, they need to hit these numbers. And so they would then print money or print Chinese RMB and loan through it would go through state-owned banks, and there is all kinds of shadow banking that's involved, but the augmented part of their fiscal deficit is the local government financing vehicles, and that can be different types of vehicles. But either way, what it goes to is having all these various provinces build new schools. Like there was one province that built a school and burnt down a neighboring school on purpose to force the kids over to their empty new school. So it literally just caused trillions and trillions of dollars to be spent where no corresponding demand exists. Build wind farms that aren't ever going to be connected or to any power grid. There's huge empty water parks. There's Disneylands. There's replicas of New York Times. There's replicas of a lot of things across the world. But there's completely empty, like Disneyland. There's nobody who can afford it. The consumers are still poor. I mean, there's more in the middle class, and then there's some upper class, but largely the citizens of China, 800 million of them, are in abject poverty. And so it's just resource misallocation on a tragic and grand scale.
So a lot of those buildings that were built, they were bought on speculation, hoping that someone would buy them. No investors actually paid for them up front. So they were hope and prayer. Money was borrowed.
That's still going on.
Okay.
Yeah, that still goes on, and that's the property developers there. So in China, when you usually look to housing starts, and then because that's what will be GDP versus. And you can look at that to evaluate what's going to happen with prices in the real estate market, but because they'll be built regardless. They'll be built regardless, and then hopefully somebody will be there to purchase it. But it's not like we are used to it in the U.S. Jim Chanos quoted one of his analysts ran the numbers, and this was back in 2015, I think, and there was enough property development such that every of the 1.4 or so billion people in China, there's enough real estate built just in like 2 years alone, or enough concrete purchased to go into real estate building in 2 years alone to give every person, every man, woman, and child a 5x5 office in the top cities. So.
And the average income for an adult Chinese person is only around $8,000, right?
Mm-hmm.
Yeah, so $8,000 is not going to buy real estate anywhere. And I've heard that rent.
And I don't even think it's $8,000. I think that's inflated.
Oh, you think that's inflated? That's interesting. One of my new China sources was telling me that his rent, he lives in one of the tier 1 or tier 2 cities. He may have, I know he has properties in both, but that his rent has gone up 900% in the last decade. Just an insane amount of rent inflation. The food inflation is going up. But
food inflation, I hear, is bad right now.
Oh, yeah.
Because of the swine flu, and then the other, they're having several medical, what would you call that? Several outbreaks, and they're not reporting the real extent, so if you're looking at the Financial Times, you're not going to see the real extent of the problem that they're having with the dead pigs I hear it's really, really, really bad.
They also have to
like
import,
almost that alert.
They also have to import most of their food too, right? So that means they need dollars to go buy food. Same thing with oil.
So historically they've imported from us. That's our farmers in the Corn Belt have been beneficiaries of China's mass importing of agricultural goods. Even though they have some arable land, they don't put it to productive use. So, yeah, and they don't have the best. I don't know why they haven't built or developed their own ability to grow the needed foods. Well, I guess they've got more middle class that can afford corn rather than just rice. Well,
I read China's Great Wall of Debt, and the author who lived in China for a decade, what he theorizes why they have the food problems is, number one, it's pollution with the air, water, and soil, and number two, it's the private property rights issue. So their air, water, and soil, a lot of it's polluted, especially around the major cities. So they either have a lack of water, and the water they do have is extremely polluted, and the governments won't pay to clean it up. And there's all these lawsuits and protests to the local and main government, the main federal totalitarian government, and then also private property rights. So if you're going to be a farmer, right, you need private property rights to make the investment in property, plant, and equipment for your farm, and they have property rights issues there. So even people who have real estate, they don't technically own it. Isn't it like a 70-year lease or something?
So that is let's not even talk about the lease part, but that is at the crux of pretty much all the problems with China's inability to have an economy that works, because people don't have rights to anything that they build, create. So if I am Bill Gates and I'm going to create this amazing software that's going to be used, 30 years later and all across the world, I'm not going to work so hard at doing so if I know that right when I've got it finished, I have to hand it over to the Central Communist Party, who then shares it with their national their national champions and everybody else. That's their policy in China, is that all intellectual property, whether stolen or created internally, and I think most of it's the first of the two, must be shared with all companies in China. So they think that that's their socialist way of thinking, that it benefits everybody. But that might sound fabulous in theory, but it's horrible in practice. You have to think about the practical incentives that you give people when you create, structures and institutional governance type situations. And that what you just said with private property rights is the same problem that they have in business and in, technology. Nobody has much incentive to take any risk, because if they do, they never win, right? They can lose, but they're not going to win.
And if I was a foreign company or corporation, I would definitely think twice about, if I say Elon Musk and Tesla Motors, right? First of all, the Tesla Motors is in trouble, but he's building a car company in China now. He doesn't have intellectual property and patents, a lot of them, but even if he did, the Chinese wouldn't honor them. So if he had this amazing new electric vehicle innovation type of car, in a couple of years, wouldn't the Chinese just steal it, and then they would steal all of his intellectual property for free?
So they're not even that great at stealing, to be honest. They try, but I mean, if you look at the indictment from on the T-Mobile case, that they created, they did a lot of work to create an entity that was supposed to be its own company and that was operating in the U.S. that was literally nothing but a vehicle to steal from T-Mobile. And there's been several cases. There's been a Motorola case. There's been a Cisco case. These ones, they settled. I'm not sure for how much money. I don't think it was disclosed, but the Cisco and Motorola. But think about Motorola. Do we think of Motorola as like this pillar of technology? No. Do we think of T-Mobile as that? No. They stole a robotic testing arm from, it's called Tappy, from T-Mobile, and literally risked all kinds of things, and it ended up, hitting them back in the face. But when you look at the basic, I mean, literally you could hire, I don't know, a team of 20 people in the United States with some software, some hardware, some engineering expertise, and rebuild that arm or a better one. So they're stealing low-level technologies and going to, putting a lot of work into doing so. So it's kind of interesting. I think the one thing that they've done well is infiltrate our network infrastructure. That was a move that was really smart, getting their switches in all our network infrastructure, so they've been able to intercept and send. So if you see a website and you go to a website, you may be really going first through a Chinese website, but it's just so fast that you don't see it, and then it takes you to whatever website you're going to. So if they want to be monitoring what you do, they can. And they were able to, I don't know if it was a APT-10. I think APT-10 was anyway, there's a hacking, there's a big, pretty advanced hacking group in China that's been pretty good. So that's one thing they're good at.
Also, the other thing that the other thing, Emma, that they seem to be good at, there's a book out by Peter Schweitzer in the last couple of years. The New York Times issued an article about this that Kyle Bass put on his Twitter in the last week or so. But I think the New York Times journalists just copied the Peter Schweitzer book, is how many key Republican and key Democrat politicians, think tank people, lobbyists, all these other key people that China has, that they're on the payroll.
That's part of the BGY and the 3S that I was referring to earlier. They will they'll find, this has gone back ages. This is like a part of the playbook of history, but you find people, put temptation in front of them, let them fall for it, and then threaten to expose, or you try to bribe, and if that doesn't work, then maybe you put temptation and try to expose, or find dirt and try to expose. But they've been doing this for ages, and the fact that people are just finding this out in the United States is quite pathetic. In Germany and in Australia, there were people in the legislature that were, I don't know if they went to jail or how they were punished, but they were recognized by these governments. It was in the news. I read it in The Economist. People could and should have taken note. And there were also professors in the United States saying they tried to write a book, and then they couldn't do it because they were scared, because the Chinese said, if you do this, we will, I don't know. But in Germany and Australia, they actually did, officially get people in trouble for voting on behalf of the Chinese Communist Party based on what the Chinese wanted them to vote for. And I'm sure the Chinese didn't make it quite obvious. They wouldn't say, for instance, Marco Rubio's new proposed law that after 3 years, if the Chinese still won't cooperate with allowing the SEC or the PCAOB to see the results of audits, then these Chinese companies would be delisted. If, say, I'm a senator, and I say I'm vehemently against this bill, that would be too obvious, right? So I don't think they would do it. They did it that obviously, but it was news. It was in newspapers. So we should have known about this a long time ago. I think the Australians were ahead of us on it. And then I don't know what Germany's, Germany has its own conflicts of interest. So I think they have some reasons that they don't want to, talk too much about what happened there.
So Kyle Bass has done interviews for the last couple months talking about how China's running twin deficits like an emerging market. Why can't China just, in their RMB denominated debt, just print away the money, do bailouts, and then keep buying physical gold like the gold community is saying, and then continue to build its position on the world stage?
But when you buy physical gold, you have to buy it from someone else. And someone else is not going to accept, as Kyle would put it, wampum or monopoly money. They want dollars, euro, yen, or pound sterling. And China has a huge shortage of really, the world trades in dollars. We know this. The dollar is a reserve currency. 85% of world transactions settle in dollars. So we'll just use dollars here. But for a practical matter, yen, euro, pounds would suffice. But so we'll call it a dollar shortage because that's really what it is. They don't generate dollars except for with their trade with the U.S. And since that's come to a shrinking rapidly, the surplus, so the dollars that they're bringing in from trade with the U.S., they're not able, they don't even have enough money to buy all the energy and the food that they need, let alone buy gold. So I don't really know. Is there something else that followed with that question? What would they do with the?
I was going to ask about the dollar-denominated debt that China has. So I think I've seen that the state-owned enterprises in China have around $2 trillion in dollar-denominated debt, but you sent me some notes before the show, and it sounds like you think that there's a lot more dollar-denominated debt throughout the Chinese economy than just that $2 trillion.
So what did I have? No, so when I said the $50 trillion in debt, that's all right. So they've got external debts that are dollar-denominated. I'm not sure, but I know what's coming due in the next year, and mostly in the next 9 months, is $1.4 trillion in U.S. dollar-denominated debts. And I think when China borrows in dollars, that's changed with the foolishness of indexes and so forth, investing in Chinese corporate bonds. But it used to be that they would be usually one-year paper. Either way, we know for sure there's $1.4 trillion in U.S. dollar-denominated debts coming due in the next 1 year. And China doesn't generate dollars again. And, they have a fiscal deficit that's bigger than any country in the world. If you put it in U.S. dollars, it's bigger than any country in the world. And they've got 10% fiscal deficit. That's with central government debt and the local, like I said, those local government financing vehicles or the local government debts. Structural current account deficit. They need money to buy energy. They need money to buy food. They need money to buy iron ore. Money, by money I mean dollars or euro, yen, pound. And so I think the bottom line is they have a real problem.
And also, China owns a lot of U.S. Treasury, so around $1.2 trillion approximately. There's, this theory going on.
But how do we know that?
Well, it's probably an old estimate. It's probably an old estimate.
Because here's the thing. Obviously the Treasury knows who they issued it to at auction. But could it not be possible that China sold some of those treasuries to Europe when they needed dollars, or to Iran or whomever did? I mean, this is obviously speculation, but I just, given that nothing else seems to align that they report, why would we believe what they report they own in treasuries? And even if they do own that in treasuries, I would be of the view, and I am of the view, that they have no more than roughly $1 trillion. Call it $1.1 trillion if we're going to assume that the treasury position is real, in actual liquid, non-RMB, so fungible currency reserves.
Well, I was going to ask you about like this theory going around for years now in like the gold community and alternative media that China's just going to dump the treasuries and it's going to crash the dollar and crash the U.S. bond market. But there's a lot of entities that own more treasuries than China. There's pension funds that own more treasuries than China.
Oh, and that's not even the thing. So think about it this way. Let's pretend that China does own the treasuries that they say they own. So if they own 1.1 trillion in treasuries, or I don't know the number you gave, call it 1.4, either way. So they own 1.4 trillion in treasuries, okay? And they've got 3 trillion in FX reserves, which is what they report. So that's the highest number, right? That 1.4 trillion in treasuries is key. If they start selling, they're going to be selling at ever declining prices when they start selling. And if they do it slow, the second somebody picks up, and they're not going to be able to hide it, the second somebody realizes that it's a state, and particularly the Chinese state that's selling, the Fed's going to start buying up treasuries, and then they're going to have lost money on their sales that they just started to fire sale off all of a sudden, dump onto the market. They're going to have lost money because they'll have sold it originally at whatever the going rate is, and then by the time they're done, they're going to be selling it for far less, and then our U.S. Fed would be picking it up at far less. I mean, we can easily, since we have the Fed, buy whatever they sell, and we could actually then, that would be so dumb on their part. And also, they're essentially a planned economy. Remember this. They don't want to. It would be foolish for the central planners to want to get rid of the treasuries. It doesn't make sense in terms of their mission.
Emma, I don't even know if the Fed needs to buy the treasuries because there's so much demand for treasuries from like pension funds and bond index funds. Like Vanguard owns over $1 trillion in treasuries. So there's a lot of entities that just buy treasuries that would probably soak up that demand. But this conspiracy theory that like China's going to crash the dollar by dumping all the treasuries has been going around like basically every couple weeks for the last decade.
That's hilarious. That's funny that you say that because I'm new to Twitter. I'm pretty new to everything. But so you say the last decade. I haven't even been in this industry or like understanding anything for the last decade. But I only came to hear that lately, and I thought it was just absolutely silly, from the second I heard it. But that it's been going around for a decade is crazy.
It's one of the most popular 2 or 3 conspiracy theories in the gold community. I think a lot of people in the gold community are smart. They want to believe that China's going to make them. They want to believe that China's going to make them rich with a higher gold price.
Yep. That's what I've come to. So I'm not in the gold community. I know a couple people that are. I am a believer in gold. I own gold, but I don't go to the gold conferences or anything like that, and so I don't know all the conspiracy theories, but I have come across a couple of people that are, that speak at those conferences and what have you, who have mentioned some of these conspiracy theories, and I try to reason with them. But we end up they just keep throwing what I would just call nonsense and things that are often just irrelevant to the whole conversation to try to divert the logic, try to divert from getting to the obvious conclusion. So yeah, I mean, I've heard that gold theorists, they say, oh, China has so much gold that we don't even know that they've mined, that they had from their rich land. Okay, if China has had all the gold that has ever been mined in the history of the earth, they still wouldn't have enough to pay off their debt, to handle their $50 trillion worth of external debt. So no, it's not even close. And so I ran the numbers. I tweeted about it, but I wouldn't even probably be able to find my own tweet. I'm not very sophisticated with these things. But either way, I mean, they would be at they wouldn't be able to get even close to $40 to $50 trillion.
Yeah, the one of the
at
largest
the current gold price.
This is correct, yeah, and I don't think they want the gold price. I don't think any government wants the gold price to go a lot higher, like $10,000, $20,000 an ounce. I don't think any government wants the gold price to go there. But I've heard people estimating that China has 40,000 tons of physical gold. The lower estimates, like Jim Rickards and some of the others, are around 20,000 or more tons of physical gold. So, I mean, even if they have that, like you said, at the market
Jim
price.
Jim Rickards claims that China has 20,000 tons of physical gold.
Yeah, and he's talked about that on some podcasts. Yeah, so I don't know if he's sticking with that number, but he's brought it up in the past.
I mean, I'm shocked because I like Jim, but I do know, he has a vested interest in selling gold, so he does like to push gold, but he also likes to stay within the realm of, from what I've seen from him. But again, I don't listen to his podcast. I look at what he's willing to put on paper, and that's shocking to me that he would claim that they've got 20,000. That they had, that much.
Oh. No. There's other people with higher estimates than that, but well, let's not talk about that. The other thing I've heard about China's treasury holdings, and this is from one of my new China sources, what he said was, and he speaks with people inside the CCP, and he's been in China for over a decade. He said that China is too scared to dump all of their treasuries because they're worried about their external credit rating from foreign credit rating agencies being downgraded.
Well, of course, because if they dumped their treasuries, they wouldn't have this safe, liquid dollar. The IMF would have a problem with that. I mean, the Article 4 review by the IMF gauges the requisite liquidity that a country has to maintain in order to be included in the SDR basket or even considered for any type of ascending nation status. And they have a formula. So if I wanted to use it on Brazil, I could use it on Brazil. The formula is there. You could go do it yourself. When they did that, when the IMF did it and ran it, and Kyle's run it recently, I don't remember what his exact outcome was, but it was too high, more than they have. In 2017, when the IMF did it, it was $3 trillion was the minimum. And so China has somehow miraculously stayed at $3 trillion. And if you look at how they report their foreign exchange reserves, there's a line that's just, I think it's called losses from loss generating entities, something along those lines. And it's just a plug. So it's literally a plug to get to $3 trillion.
Yeah,
that line popped up conveniently one year.
I was going to ask you about the reserves. So I've asked a number of different money managers. I've listened to the Kyle Bass interviews. I've spoken with you. One of my more recent conversations with someone was that even if China has the reserves, it's already the reserves, the $3 trillion, even anywhere around that number, they've already promised it for all these projects. So there's $1 trillion promised for Belt and Road. There's they have all these other hedge funds all around the globe in other asset markets and sovereign wealth funds. So a lot of that money, even if they do have it, is already tied up.
So here's the thing: the $2 trillion of that is in. You can see it if you look at what China reports, and they break down since CIC, China Investment Fund, which is invested in illiquid private equity and venture capital funds, so that in private equity and venture capital, you commit capital for 10 years minimum, and then usually the manager can extend it to 12. So at the end of the 10, they can extend it to if they want. So it's absolutely, it's not liquid, and that's been known. So you really just want to look at what I call the treasury position, because everything that's not that portion is really just what they've got. I believe, and we believe, what they have there is just the treasuries is really their liquidity position. What else are they going to hold their liquidity? I mean, they could report, okay, we have, I don't know, $500 billion in euro, but they're not in the game of holding on to euro. So I guess they could put it in they could pay the Germans and put it in some bonds. But anyway, the crux of it is their reported treasury position, assuming it's actually correct, I believe is really the only liquidity that they've got.
And Kyle Bass has said that their reserves are almost out. So that means then that for them to accumulate more reserves, they would have to start running, like you said, trade surpluses with the U.S. And with the trade war we have, it's not possible. So China's getting really badly hurt the longer this trade war goes on. You'd think that they would want some type of deal, even on paper, so they could get more dollars coming back in, even if they could finagle it on paper and they would still cheat.
Well, here's the problem, though. Okay. So, first, I'm not sure that I think even with the trade wars that are going on, the trade wars that don't say, I mean, Trump's not saying you can't run surpluses with the United States. So they could still generate some dollars from the United States. But right now, the way it's escalated, it's, obviously problematic. But beyond the pretending it hasn't gone to the whole Huawei thing, because now that we are not allowing our components to go to Huawei, I mean, that cripples Huawei, and now other countries and other companies that were big buyers of Huawei's equipment are like, then we're going to need to rethink this, because even in the short term, people learn lessons from these things. So that it's a double-edged sword, because now the Chinese have learned a lesson, but also Huawei's customers have learned a lesson.
Do you think that China can actually win this trade war, or do you think that there's too much pain right now going on in the Chinese economy from food price inflation and maybe manufacturers in China getting really hurt because now their goods are not competitive to ship to the U.S., that the pain is going to be too immense for them to continue on with the escalating trade war that China is doing? Or do you think that if China maybe goes for the nuclear option, which is rare earth, do you think that China can win the trade war and force Trump to cave?
So I usually use air quotes when I say it. Can you still hear me the same, by the way?
Yeah.
Okay. So the term trade war may have been appropriate, when Trump didn't even realize our ability to really back them into a corner because of their dollar shortage. But, from my contacts that are close to and advise the administration and the trade team with Lighthizer and his team, they only became really privy to the negotiating stance that they had vis-a-vis the dollar shortage about a month or two ago, and so before that, when it was all about they're possibly a currency manipulator, when I even knew long before that it wouldn't make sense for them to want to depreciate their currency. They can't do that. They also, so Xi Jinping and his team of 6 or so, that's really so not all of the Communist Party wants Xi in power. I mean, I would argue that a lot of them don't. But Xi has a team of about 6 that he inserted in the top positions. And they are trying to maintain power over maintain control over China as a whole, as the economy, everything about China. And they're very aware, looking at Chinese history and the current situation, that to stay in power, they're going to have to maintain jobs and a decent or semi-healthy economy, because the Chinese people don't trust the Communist Party. The way the Communist Party kind of, and they do this purposely, because they're going to lie to the people, and probably over time they will get caught. This is pretending I'm thinking as Xi's strategic advisor, or you could call it Mao's strategic advisor, because they've been doing this for a long time. But if I'm thinking about it, I'm like, I'm going to lie to the people, that masses of people. I might get caught here and there. So I'm going to tell the truth on some serious things, and then I'm not going to tell the truth on some inconsequential things and some serious things, and I'm just going to make it so that no one has a clue when I'm lying or when I'm telling the truth, so that if it's something that could potentially hurt them, they're going to believe me, because they're going to have to err on the side of caution. That's kind of the relationship that the Chinese people have with their leaders. And even top PLA officials, so I have a contact that's inside the PLA, and he's a top official, and by definition, he's also within the CCP. He does not, they're playing the same game. Like, he doesn't trust Xi. If Xi was going to devalue, which is going to have to, that Chinese RMB cannot hold below 7. It just can't. But if and when it's going to need to go through 7, they don't trust that she's going to tell them. They want their money out. They're actually at the point that Wang Qishan and she have done such a, I guess at this point, such a thorough job of blocking every way of getting money out. They're just kind of like, how do we get our money out? What do we do? And I'm not in a position to advise on that. But I was asked the question, and I just said, isn't your kid at school? I mean, I don't know. Don't ask me. But so long story short, they're between a rock and a hard place in that they can't. Okay, so they need to devalue, but if they devalue, then they anger Trump, they anger other people that they trade with, but then they could actually start running trade surpluses, what have you. But they can, but then they can't afford to import all the things that they need to import to then add some intermediate components and sell them. So you've got to have a strong enough currency to get the iron ore to then sell it to the United States in the form of a finished good. But if you weaken your currency to try to do that, well, then you have less purchasing power in the overseas market for the raw materials, even though in theory, if you were able to produce a product, you'd be more competitive in selling it, right? So they have a real problem there. It's like you lose if you do, you lose if you don't. So I think that what their strategy is just to play hardball and wait Trump out, and I'm certain they have people working in the United States in important places and positions to prevent him from being reelected. Will they be successful? Who knows? Does it make me nervous? Yeah. Their influence and how well they've kept their subversive tactics and the way that they go about these things and how they've got away with it for so long, the extent of their influence and how many people are actually acting on their behalf in the United States does worry me. Are they going to be able to prevent a Trump reelection? I don't know, but I kind of doubt it. But if Trump is reelected, I think that she will know right on that day, or right when that is announced, that his time is coming to a relatively swift end.
Well, Emma, the Democrats, at least in public, the key Democrats in Congress are also acting as if they're standing with Trump against China. So I don't know if that's going to be how their actions are with what their words.
If it's not somebody out, if it's any type of swamp creature that's spent their whole life in politics, they don't act anything that could cause any friction with the corporations or the corporate elites, the CEOs of companies. They don't want to go there. They're anti-confrontation. So, I mean, Nancy Pelosi is one exception in terms of how much she's done, even over 30 years ago. But come on, do you think how well do you think Nancy Pelosi is going to go up against Xi Jinping? How many people? If Lighthizer is continued to be entrusted with handling the situation, I think that's great. But as you know, and as we just saw when Trump was elected, I mean, their influence and the Chinese influence will be up in there, and everybody's influence, and that's what they're hoping for, is just no more Trump, so that they can get the Congress will be broken, and the Congress will move on to other issues and ignore China and back to business as usual. Exactly, and Congress moves extremely slow, so yeah, just throw some interruptions in there. We'll be sitting here in the U.S., scratching each other's backs, and I don't know, while they're taking over the world. I mean, that's the idea, and they, we've been kind of, our government isn't necessarily the most efficient or effective. I just think DMV, and it pretty much summarizes how things go. There's been so many people trying to get something like what Rubio just put forth yesterday, I believe he put it forth. That there's been so many people talking to and going to Congress for so long. It's just amazing how they sit there and waste their time on all kinds of frivolous issues and just ignore these critical. The incentives are all backward is really how I see it. Yeah, I've lived in the Washington, D.C. metro area for almost 20 years, and I could tell you, I even interned many, many years ago at the White House at a call center, and I could tell you how broken Congress is. It's all about special interests and lobbying, and the bureaucracy. It's just a disaster. They intentionally don't get anything done as long as someone is getting rich, a special interest group, a congressman who comes here with no money and then gets rich. But as we wrap things up, Emma, I've kept you for over an hour. Let me just ask you one more question before I let you go. We have a lot of other questions and topics. You'll have to come back on in the future for another interview. So you talked about the capital controls in China, but from the evidence I've seen, whether it's the Vancouver property bubble, prices in Toronto, the Australian real estate bubble, hasn't China already created real estate bubbles all around the globe with money being taken out? So hasn't a lot of money already left China then? And hasn't China been responsible for a lot of this global housing bubble besides just all these central banks? Yeah, that's where I was going at the very start of this podcast interview, is that prior to 2016, when they really clamped down, there was all sorts of different ways, over-invoicing. There was all sorts of different ways that the Chinese were able to successfully get their money out. And so it inflated properties from Orange County and Newport, and that's in California, to Vancouver, to Australia, where housing isn't even remotely affordable anymore. And they've also caused bubbles that are starting to become very concerning in places like Australia and Vancouver, and maybe in certain places of the United States. So absolutely, and that's the world has been living off of the injections, or the heroin injections, or the oxycodone injections from China for 10 or more than 10 years, and it's not going to keep coming. So now the world kind of relies, and it always did. If you look at like the second derivative driver of growth, but the world's going to look to the United States to be the one that can still grow and has some room to reduce rates or do something, because in Europe they don't have any room. I guess in the UK they do, but they're so small it's irrelevant. We're really the last resort, and we are not looking any way that I would call. I don't think it's looking so good. I mean, we've got a little bit to move, but I'm concerned that the Fed cuts rates and the dollar stays strong, and then if that happens, the central bank, the Fed, will realize. That's when they realize that we are not effective anymore, because the dollar is if you want to have any global reflationary trade, which that whole thing when everybody was saying that was occurring never really existed, but to have strength in emerging markets, commodities going up, you need a U.S. dollar that's not continuing to get stronger, and it's actually getting weaker than it is now. And I think everybody sees the slowdown that's going, that's kind of global, and sees the debt problems in emerging markets and in Europe, and a lot of dollar debt problems, that they're just moving their money where it's safe, which is in U.S. dollars and in treasuries in particular. And so I expect continued disinflation. I think the treasury yield is going to go down on the 10-year all the way through the 30-year. I expect that to continue to come down, even though people would say I was crazy after it came all the way down to just over 2%. But no, I mean, I think it can go much, much lower. I mean, just look at Japan. Just look at Japan and see how since 1987 their equity market still has not recovered. It's still not as high as it was back in the heyday before it all fell apart. So that is like a kind of what I would say an exhibit A of central bank efficacy falling and then becoming largely just ineffective. And I think that we may be on that route longer term, given our unfunded pensions, our, all the entitlements and other non-balance sheet, off-balance sheet debts that we have, and the way that our Fed and academic institutions look at the situation and how they keep trying to address it. I mean, they're just following the Japan playbook. So I hope things are different, but I wouldn't be. I'm not like pounding the table saying everything's great. That's for sure.
Well, were you? Go ahead.
China's been able to muddle through a little bit, and I'm not sure how long they're going to be able to, but they're going to get another. They are currently, and it's going to continue for the next 20 months. They're going to get $3 trillion from the Bloomberg Barclays Global Government Bond Aggregate increased allocation to China, to the Chinese bond market, which just goes to the PBOC, which means the Communist Party has access to those funds. There's another $3 trillion in total. When you look at 6% of that index is going to China in a quote-unquote transitional period of 20 months starting in April. So they're getting a little buffer from that. when I saw this, I mean, I got every China expert and added them on Twitter saying, please tell me I calculated a number wrong. Please tell me I talked to Kyle about it. And Kyle actually told me we've been so angry by this. We've been working on this for so long, but apparently it's still happening. So that's one thing that's going to give them a little time, buys them a little time maybe. I don't know how, like we talked about, we don't know how bad their real situation is, but I suspect it's really quite bad. So that could be enough to just allow them to wait out Trump. Who knows? But something to be aware of.
Sorry, what were you going to say about Trump?
It could be one of the things that they're counting on to help them wait out Trump, because they're literally out of money. I mean, they wouldn't be able to wait out Trump if they don't have some source of dollars. So MSCI too. And I would, if I were your listeners, I would be very concerned to make sure my money is not in a fund that tracks Bloomberg Barclays Global Aggregate Government Bond Index, which is the most popular global government bond index that ETFs track, that mutual fund managers benchmark against. I would make sure that my money is not invested in that, and that it's also not invested in MSCI emerging markets. So the MSCI emerging markets index is going to be invested in a lot of fake companies that don't exist. That may sound outlandish, but it's true, and so I'm going to say it.
Yeah, the Wall Street Journal, to back you up there, the Wall Street Journal did an investigative report saying Morgan Stanley was pressured by the CCP to put these Chinese companies into their emerging markets index fund, right?
Yeah, so I mean, I haven't read that article, but I mean, okay, so how did they know that, and why did Morgan Stanley, they pressured us, so we did that? I think they got paid or something. I don't know, but I believe that for sure. I don't know if they were bribed, pressured, threatened, who knows. But that decision just seemed appalling to me, especially considering there's a lot of people at Morgan Stanley that must know. They should know. They would be they wouldn't be doing their fiduciary duty to the wealth management clients for their wealth management side of the business to not know that all these Chinese companies, a large share of them don't even exist. Like the operation, certain facilities, they're not there. Like to allow that to happen, I don't know how that happened, but I think that it's something that Kyle is still working on, and I hope we can get more awareness about it, at least for people who want to make sure they don't lose their money.
So in wrapping things up here, Emma, you've given my listeners a lot to think about. So some of them are in the gold community. They're not going to believe things you say. They're still going to think that China is going to crash the dollar, that China is accumulating massive amounts of gold. And I would say to them that even if China is accumulating massive amounts of gold, their credit bubble, their dollar shortage is growing faster than their gold accumulation. So their credit bubble is growing way faster than their gold holdings, and their dollar shortage is real, although it sounds like you just mentioned that they're going to get a brief bailout.
Yeah, correct.
So
if
our listeners,
I don't understand that gold argument. I mean, just tell for your gold listeners, if they can just do the quick calculations, go on Google, look at how many tons have been mined in all of history, to use the current price, because as far as I'm aware, nobody's floating the price so it can just go to 10,000. And when I did the math, well, I actually didn't do the math. My inclination would be it would go somewhere to like $10,000 if that were to happen. But anyways, that aside, at the current price, look at the tons, do the math, and then compare that to $50 trillion. It's nowhere near what China would do.
And 50 trillion is still growing, right? It hasn't stopped. They want the credit bubble to keep going. The last charts I've seen of the money supply in China and the credit growth in China, it's still going. There was a brief blip about 8 to 12 months ago, and then that blip, it just turned around, and they want it to keep going. They're going at a breakneck pace, over 65 million empty homes on some estimates, and they're building 50 they're building 55 of the world's 100 tallest skyscrapers, and a lot of these skyscrapers are not even in Tier 1 or Tier 2 cities.
Yep. See, that's the exact same thing as building railways just to get rid of them, or building schools to burn them. It's just for the purpose of crushing GDP. Also, one more thing for your listeners before we go, I would recommend that you watch. There's a program on Al Jazeera. I know that's not everybody's favorite network, but when it comes to China, they do good reporting. It's on the ground. It shows you all these empty cities. It shows you the roads to nowhere. It's really a great piece. They've got a couple really good ones called something China Inc. It's Al Jazeera, China, End of China Inc. And, yeah, have a look.
You'll send me the link, and I'll put it. You'll send me the link, and I'll put it at the end of the video. Perfect. Well, Emma, I want to thank you very much for your time today. If our listeners want to follow your work, how do they do so?
They can follow me on Twitter, and I have more followers actually on LinkedIn, but I've kind of reduced my usage of LinkedIn. So on Twitter, I'm at we'll put the link on there, and then for now, I'm not writing newsletters for the public because of my existing position and conflicts of interest, but I may be doing so down the line. So.
Excellent. Well, thank you for your time, and we didn't cover all the other topics we have planned, but I think you gave our listeners a lot of interesting thoughts on China.
Great. Thanks, Jason. Thanks for having me on.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content, and you decide that you want to give a one-time donation, you can go to wallstreetformainstreet.com, that's wallstreetformainst.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.